영상이 시작되기 전에 먼저 등장할 5개의 문장을 보여드릴게요. 빈칸에 들어갈 표현을 유추해보세요. 단어 하나하나를 직역하지 않고 전체 의미에 맞게 의역하고자 노력합니다. 그게 바로 영어식 사고의 출발이에요. 그럼 시작해볼까요?
359% year-over-year jump in RPO. It's a peek into future sales. Economic downturns. There are always external risks. Long-term commitment figures.
Welcome to the magic of listening. Today we're looking at something, well, maybe a bit technical sounding, remaining performance obligations, or RPO.
Right.
But it can actually completely flip how you see a company's future. We're going to unpack Oracle's recent numbers.
Yeah, it's fascinating, isn't it? How just one metric can sort of reframe the whole story. You see a small miss, but then this RPO number pops up, and suddenly there's all this long-term confidence.
Okay, so let's really get into it. Oracle's Q1 for fiscal 26. They reported this huge, 359% year-over-year jump in RPO.
Huge is right, up to $455 billion.
Wow. And that was driven by 4 really big customer deals, right? Multi-billion-dollar contracts. But maybe for listeners who aren't familiar, what exactly is RPO?
Okay, yeah, good question. So RPO, it's basically contracted revenue, but it's revenue the company hasn't booked as income yet under the official accounting rules.
Got it. So it's money they're definitely going to get, but it's for work they haven't finished delivering.
Exactly. Think of it like pre-orders or a massive backlog of confirmed business. It's contractually locked in, expected to be delivered and recognized down the line.
So it's a peek into future sales, basically.
A very solid peak, yeah. A powerful indicator, maybe a bit lagging because the deals are already signed, but it shows revenue visibility. For Oracle, this huge number points to massive long-term cloud deals. We're talking OCI, their cloud infrastructure, and AI stuff. It gives investors a clear look at a really sustained revenue path.
Okay, here's where it gets really interesting, though. Because despite that massive RPO number, Oracle's actual Q1 results, the immediate ones, were, well, slight misses. Total revenue was $14.9 billion. Forecast was about $15 billion. And the earnings per share, the non-GAAP EPS, came in at $1.47, just under the $1.48 expected. So you'd think, okay, stock's going to dip, right?
You'd absolutely think that, but nope. Investors were clearly excited. Oracle's stock shot up, 23% to 27% in after-hours trading.
That's a huge reaction to what looks like a miss on paper.
It really is. And if you connect the dots, it obviously wasn't about those immediate Q1 numbers. It was all about that RPO surge. That created this huge wave of confidence about future revenue that's already locked in, even if it hasn't hit the income statement yet.
So the market was basically saying, okay, slight miss now, but wow, look at the future business.
Precisely. They saw the long game.
But playing devil's advocate for a second, these are long-term contracts, often in fast-moving areas like cloud and AI. How guaranteed is that revenue, really? Couldn't things change? Competitors, economic downturns?
That's a fair point, and it's important. No contract is totally bulletproof, right? There are always external risks. But the key thing about RPO is that these are contractual commitments.
Okay.
Oracle is obligated to deliver. The customers are obligated to pay. It's a much, much stronger signal than just, say, a sales projection or pipeline estimate. It means a huge chunk of Oracle's future revenue isn't just wishful thinking, it's backed by signed deals. That $455 billion backlog, it just dwarfs the current quarterly revenue.
Right. So what does this signal then for Oracle's strategy moving forward?
Well, it strongly backs up what their management is saying. They're forecasting their cloud infrastructure revenue, OCI, to grow from, $18 billion this year?
Yeah.
To $144 billion in just 4 years. That's incredibly ambitious.
Very aggressive.
But a lot of that projected growth is already reflected in these RPO commitments. So this metric, it just completely changes the conversation about their growth potential. It shifts the focus away from the minor short-term misses. It's like someone described it as Oracle's future revenue on a leash.
Ha! I like that. On a leash.
Yeah, it's there. It's secured by the contract, but it hasn't been, fully let loose onto the income statement yet. It clearly signals their big bet on cloud, and AI is paying off in terms of long-term bookings.
That really paints a picture. So what we've kind of learned today is that looking past the immediate headlines, looking at metrics like RPO, it can give you a totally different and maybe more exciting view of a company like Oracle's long haul.
Absolutely. It's about understanding those deeper signals. It means you're not just reacting to the noise of quarterly earnings beats or misses. You're looking at the strategic direction, the real potential building up.
Makes sense.
It kind of leaves you with a question, doesn't it? How might looking at a company's RPO or maybe similar long-term commitment figures change your view of its future? It's definitely something worth thinking about if you want to be truly informed.
영어와 시사 경제 두 마리 토끼를 한 번에 잡는 알찬 시간 되셨다면 구독과 좋아요를 꾹 눌러주세요. 감사합니다.